Now that we understand the lay of the land, I want to show people how to actually use these forces radically to transform their financial lives for the better. Now listen, it's not your fault that our government's broke. It's not your fault that the Fed has been protecting the financial elites for decades. But once you know what to do, it is your fault if you don't do it. Because if you don't get your money out of the dollar and into assets that thrive during inflation, you won't just lose 20% or 30% of your real wealth. Over the next 10 years, you're going to lose all of it. But, and this is a very important but, if you do own the right assets, you've got a chance to grow your wealth massively in the years ahead. Why? Well, because everybody else is going to have to flood into those assets, and it's already happening right now.
So which assets are we talking about? A lot of people talk about gold and Bitcoin.
Of course, I am too. Those are great ways of profiting from a huge inflation, and I'm a fan of both assets. So, of course, it makes a lot of sense for every investor to allocate some portion of their wealth into physical gold. Absolutely. And by the way, I believe in physical gold. I'm not just talking about buying GLD. I own physical gold, and I buy more every year, and I've never sold a single ounce. Because while the dollar has lost 90% of its purchasing power over the last 80 years, gold has a 5,000-year history of maintaining its value very consistently. So the case is becoming absolutely crystal clear that you can use gold, and of course, I believe Bitcoin can be used in a similar fashion to help you opt out of the dollar system, opt out of the banking system, and retain direct control over your wealth. People talk about the volatility of Bitcoin, and it is absolutely wild. That's true. But I'll take Bitcoin's volatile 15,000% rise over the last decade rather than the dollar's relentless decline. Wouldn't you?
And do you? Do you
Yes.
own them?
Yes, I own both because gold and Bitcoin will help you protect your capital as this situation worsens. And it'll do so in a couple of reasons. One, because fundamentally the dollar is going to lose value, so those assets that don't lose value will get higher in nominal price. But more importantly, as everybody realizes that the banks are failing, they're going to pile into Bitcoin and gold in a way we haven't seen probably since the 1970s. And of course, it'll be even bigger this time. But I think there's a much better option than either gold or Bitcoin. And I'll admit, Bitcoin's outperformed everything for the last 2 decades. So this hasn't been the case in recent history, but I believe it'll be the case going forward. I think that Bitcoin is going to have lower volatility and lower upside as it becomes a mature asset. So I think there's a better option. This is obviously my opinion, and I probably won't convince anybody of this, but I'm going to try. So consider this. You're familiar with Coca-Cola Company?
Oh, yeah.
All right. So Coke's IPO was in 1919, and it went out to the market at $40 a share. Since 1919, the US dollar has been devalued by roughly 2% a year, most notably in 1933 when the government seized all the gold and massively devalued the dollar. And then, of course, in 1971, where the government once again repudiated its gold contracts and devalued the dollar massively. Today, what it would have cost you for $1 in 1919, if you're going to go buy something for $1 in 1919, today that would cost $17. So that's a collapse of 95% of the dollar's purchasing power. What if instead, though, instead of holding dollars, what if you'd gotten your paycheck, cashed it, and then went to the stock market and bought Coke stock? Well, thanks to reinvesting the dividends and 11 different stock splits, that initial purchase of Coke stock would now be more than 300,000 shares of Coke stock. And that $40 investment in 1919 would now be worth more than $10 million. That is a 500,000 times return. And even when you adjust for all the inflation, that's still a real return of 25,000 times. In my belief, there is no other kind of investment that comes close to growing your wealth as a long-term investment in a high-quality common stock. And that will remain true even during this crisis. The right kinds of companies will outperform gold and will outperform Bitcoin. And that is exactly why, in order to protect and grow your money in real terms, especially as the government turns on the printing press in an unprecedented way, you have got to own productive assets. That is, you've got to own great businesses. It is the only effective solution at your disposal for most Americans.
I completely agree with you. You have to deploy the capital in something that produces. It's not just protecting, it's thriving. It's enriching yourself. But of course, not any company will do.
You're right, and that's where most people come unstuck. They're frozen. They don't know what to buy, and they're afraid, and as a result, they're just going to get inflated away. After all, everybody knows common stocks offer investors the highest returns over time, except they don't. Not on average, and it's not even close. The truth is, most stocks lose money, and as a result, most investors lose money too. But wait, Porter, I thought you just said that common stocks are the best way to protect my wealth. They are, but only the right kind of stocks. So look at this. This is the Center for Research in Security Prices database. It has all of the stocks that traded in the United States since 1925. In total, the database contains the trading history of 29,078 stocks. The majority of those, Peter, 51%, lost investors' money. If you don't know this and you simply buy a stock at random, you're more likely than not to lose all your money. And right now, that's especially true and dangerous because most stocks are incredibly expensive right now by nearly every measure. So, with so much money flowing into stocks, despite a deteriorating macro environment, it's not surprising that the major indexes are in nosebleed territory in terms of the valuations. In fact, a recent Bank of America analysis shows that the S&P 500 is well above its long-term historical averages in terms of the valuations and 19 out of 20 key valuation metrics. In other words, buying the wrong companies right now is a recipe for disaster because there's really only one direction for them to go, and that's down. Stocks are really expensive right now. That's why at Porter & Company, which is my private research firm, we specialize in providing investment ideas and recommendations that are well capitalized, that are capital efficient, and they're undervalued. And those are the three things you gotta have to protect and grow your wealth in this environment. These are investment ideas that have the potential to produce very high returns on equity and invested capital, and that have plenty of room for additional growth. You must only own the best, the most enduring, and the leading businesses. These are the companies that have the ability to increase their prices to protect you from inflation, and they're going to be able to compound your capital for decades to come. Companies like RLI Corporation. No one's ever heard of this company, I know. It's a little-known property and casualty insurer. I've been writing about it for almost a decade. Since RLI started trading, the dollar's real value has continued to decline year after year. But look, the shares of RLI have increased by more than 20,000%. You probably have gotten an insurance bill recently, and you've probably seen that insurance prices have gone through the roof. This is exactly the kind of company that can protect you from inflation. Why? Well, because it can easily raise prices. And listen, I don't want to confuse anybody. I'm not telling you to go out and buy RLI right now. I'm just saying this is exactly the kind of business that you want to look for. So, there's a couple of stocks I want to talk about today. And I'm even going to give you, for free, my number one highest conviction recommendation. This is a company that I recommended to our members more than 2 years ago, and it's already up by more than 50%, but it is, Peter, it's still cheap. And this is only the beginning of a multi-decade run. You see, for a number of unique reasons, this company is perfectly positioned to capitalize on the looming debt crisis. It's going to make more money in the crisis, not less. And of course, it's going to continue to raise prices, so it'll benefit from the collapse in the dollar. It has tremendous pricing power. It can increase prices in line or above inflation without increasing costs too much. And critically, without losing the customers, and you'll see why in a second. And by the way, this company is mostly international. It has a huge international market. With the dollar collapsing, this is a huge advantage to this company because it makes a lot of money in foreign currencies. And those foreign currencies are going to be worth more as the dollar declines. I'm talking about the tobacco giant. I'm talking about Philip Morris.
Yeah, you're talking about smoke-free electronic cigarettes, vaping, nicotine patches.
Yep, it's a massive market, and the new market is going to double over the next 5 years. It's Philip Morris's most successful smoke-free product. And it's the number 2 nicotine brand in the world with nearly 18 million daily users, 18 million people every day. It generates about 30% of Philip Morris's revenues. And as the U.S. plunges into a full-blown financial crisis, Philip Morris is going to keep selling more and more and more of that stuff every year. And secondly, while Philip Morris is domiciled and headquartered in the United States, again, it gets the majority of its sales from international markets. And that means it'll earn revenue in foreign currencies, before it converts those back into dollars, which then distributes to U.S. investors. So you're going to be getting valuable foreign currencies, which are going to go up in value as the dollar declines. That is why I believe Philip Morris is the absolute perfect hedge against the ongoing collapse of our currency.
There's a reason why the world's best informed investors read my daily journal. Subscribe for free at portersjournal.com.